Okay. Good evening and everybody. This is TezAsia hackathon. For this workshop, I would like to introduce you Keith Taylor. He is a member from Hoover Labs and the makers of Kolibri, which is actually the first algorithmic stablecoin on the Tezos on the network. So he's also the founder of tesseract geometry and proof of stake validator film which operates on Tezos. So I would like to to introduce him to the stage, to conduct this workshop. So thank you once again, Keith, for actually appearing here and and preparing to actually to teach us about on DeFi on Tezos. And yeah, you can have the stage now. Yeah.
Cool. Thanks for having me, Brad. Brian kind of already introduced me, but I work on Kolibri, which is an algorithmic stablecoin on Tezos. And if you don't know what an algorithmic stablecoin is, that's okay. We'll cover that during the presentation. I'm a member of Hover Labs, which is a 3-person engineering team with myself, Ryan Sears, and Luke Youngblood, and we work together to build the protocol. So this morning, I wanted to talk through what Tezos DeFi looks like and what DeFi is more generally, and kind of talk through like the building blocks of DeFi and why these different products are important and how they kind of fit together in a ecosystem sort of sense. So before we begin, I know this is really boring, but nothing that I say in this presentation is financial advice, so please do your own research. Nothing is investment advice. We'll talk about a bunch of financial products that you may be interested in putting your money into, but I'm not recommending that you do so. So just quick disclaimer. Cool. So I think I wanted to start out by just sort of talking through like what is DeFi generally. And so DeFi is the idea that we can take traditional finance concepts that are typically run by centralized entities like banks or brokers, and we can put them onto the blockchain via smart contracts. And this allows us to create trustless products that execute on the blockchain. And we get all of the benefits of blockchain, of fast clearing, fast settlement, transparency, non-censorability. And as a result, we see DeFi growing pretty rapidly. So this chart kind of shows like how much money has been in DeFi for the last 5 years. And it came from DeFiPulse.com a few months ago. And DeFi has, eclipsed, at the time I pulled this chart, it was $50 billion. I think it's slightly higher today. And obviously like that is somewhat dependent on how much or how valued the underlying assets are. But over time, what we've really seen, even though you see kind of like these peaks and valleys in this chart, is this is growing exponentially. So more and more people are putting more and more money into these things, and they're becoming more and more popular ways to do your financial life and work with financial products. So I kind of wanted to talk through what the sort of building blocks of DeFi are. So how do we get to the point that like we can do banking on a blockchain or like trading of assets on a blockchain? And so I kind of think of this as like a pyramid of needs. And so like you need these base layers first, and you can kind of build up. So at the very base layer, you have to have a consensus layer and a smart contract language. So on Tezos, this is the actual protocol itself. The smart contract language is Michelson, and it executes trustlessly on a set of bakers around the world that can produce transactions and trustlessly execute smart contracts. So Tezos definitely has that today. And then as you sort of move up the pyramid, once you have a base layer, the next thing you kind of need to do is, or need to have to start like building these interesting financial products, is have a standard to represent assets on your chain. And the standards are important because when you think about DeFi products, they're kind of like Lego blocks that all fit together. And so having a standard lets all of these assets become interoperable on the blockchain. And then along with those token standards comes decentralized exchanges. So once you have these assets, or a way of defining assets and people issuing assets on the blockchain, you need a way for people to trade and exchange them. And so decentralized exchanges come in there. Above that, you can kind of think about sort of bringing on other assets from different chains. So like you could imagine that we could wrap Bitcoin or wrap Ethereum and like move assets into Tezos. And so like if you own existing assets, you can bring them into the network and use them in the financial products, whether that is like gold that you've tokenized in Ethereum, or whether it's like Bitcoin or some other asset out there. And so once you have all of these assets floating around, you can trade them and you can swap them and you can hold on to them and keep them on this network. But there's probably like some other like interesting things you'd like to do with them as far as financial products. And so the next thing you really need once you have all of these assets running around is an on-chain price oracle. And so an oracle is a smart contract that somehow tells us data about the outside world. So a blockchain doesn't know the price of Bitcoin. It needs to ask an oracle contract. And so these oracle contracts can let you kind of know the prices of assets, which is pretty useful for a lot of things that you might want to do at a high level. And then above that, like you can kind of think about stable coins and synthetic assets. So once you know the prices of things, you can start creating derivative products and derivative assets. And then stable coins are really interesting and useful because they are stable in value, which gives you like a good kind of medium of exchange, which is like a great property of money. And then once you have kind of like all these assets and you know the prices, like you can imagine that like lending, so borrowing and lending becomes available to us. And then finally, like after you have sort of like all of these base layers, like you can imagine like options or insurance or like sort of other like really high level like financial products become available to us. And so today, like I think we'll talk through kind of all of these different levels in this pyramid, but Tezos today is somewhere above the stablecoins and synthetic assets in this pyramid and kind of below lending platforms, which is really cool because it means that we're kind of getting to the top of this pyramid and there's a lot of cool stuff at the top we can build around like options and lending and stuff. And I think there's like a lot of fertile ground to kind of do that on Tezos. So I just wanted to talk a little bit about price oracles, because I think they're really important. And I forget if I mentioned, I built an oracle called Harbinger, and I kind of want to talk through how Harbinger works as well. But in general, price oracles take data from the outside world and they put it onto the chain. Blockchains execute in a totally hermetic environment, so they don't have communication with the outside world. They can't hit like an API online and say, hey, what is the price of like gold or what is the price of Bitcoin right now? So generally a oracle sort of works in the fashion that this diagram has. So there's some data source off chain, and like the classic oracle kind of thing is, we want the price of an asset. So that's what, think about like there's an API on Coinbase or an API on like the stock market that tells you the price of something. And so like we call that the data source, and data source knows all of the data. We need to get it onto the chain. So then there's like a poster, and the poster could be in could be anyone. So it's an entity who takes the data from the data source and figures out how to put it on chain and pays that transaction fee. And then on chain, we have an Oracle smart contract, and the Oracle smart contract is just storing this data and making it accessible. So once we have data loaded into a smart contract, other smart contracts can go talk to it or go get that data. And so on the far right side of this, then we have DeFi apps and services, which may need or want this data. And so those smart contracts or those families of smart contracts can go talk to the Oracle smart contract and get data in and out of it. And so when you think about oracles, like there's a couple ways that like we can kind of wire these things up. And it mostly depends on this like orange and red block. So one way is just we can choose a set of posters that we choose to trust. You might be like, wow, Kiefer is a really trustworthy guy. I would let him update my oracle, which is kind of like the easiest way to do this, but also the most trustless because it means that I could post a bad price at any time. A kind of like more secure way of doing this is using signed price feeds. So the way Harbinger works, which is an Oracle I built, is the data source provides an API which has data in it, but also has a signature of their key, or a signature proving the authenticity of the data using their private key. And the Oracle smart contract will accept data from anyone as long as you can show that the data was properly signed. And in that way, anyone who wants to put data on chain and use it can just grab the data from the data source, pay the transaction fee to put it on the Tezos network, and now it's in a smart contract that anyone can use. There's a lot of configurations of oracles. And so there's also like Chainlink is out on Tezos now, and there's another one called Ubernetic, and they both, well, sorry, I don't think Chainlink is, but Ubernetic is also out, and they kind of use the same sort of setup where their poster uses cryptographic signing in order to post prices. So moving kind of forward, like the wrapped assets or wrapped assets on Tezos that I talked about. So there's a few floating around these days. So this is just a sampling as well. There are many more, I guess, at this point. But there's TZBTC, which is Bitcoin. So you send Bitcoin to a custodian, they issue you this token that is redeemable one-to-one for Bitcoin. There are, and so there's like crypto assets like this. There are also assets that are representative of fiat currencies. So USDTZ and USDS are stablecoin wrapped assets. And so you send someone either a USDC or you send stably a dollar, a US dollar, like via ACH or via wire, and they'll issue you a token that you can redeem anytime. And so wrapped assets are pretty straightforward to kind of think about. The interesting thing about them is you're implicitly trusting this custodian. So, they're not trustless assets. They're backed by a company or a consortium or another entity who has assets in escrow. And so if you're using a wrapped asset, you're basically trusting that that custodian isn't going to get hacked or run away with your asset, or they haven't minted more tokens than they have, assets in reserve. And so generally, like when you look at all of the companies I have on screen here, they're very reputable, and they produce reports about their holdings and transparency and stuff. So, obviously, I don't think this is a huge risk, but we can kind of talk about what alternatives are later in this presentation. Right, and so along those lines, you can imagine synthetic assets being really interesting. And so synthetic assets are assets that are created to look like other assets. So I build a synthetic asset called KUSD with Hover Labs. There's another synthetic stablecoin called UUSD by a team called Uves. And these assets are both issued on Tezos, and they both look like a dollar and behave very much like a dollar, but they're not backed by a custodian. They're backed by a set of smart contracts. And this is like really useful because you get all of the value of having a like stable means of exchange where the prices of these things aren't volatile, and you get all the advantages of crypto, and you're also not trusting anyone to not run away with your money or not issue more coins or decide to not do business with your nationality anymore. And so I wanted to kind of like dig in a little bit to how Kolibri works on Tezos. So Kolibri is like I said, a synthetic stablecoin, and it issues a token called KUSD, which is pegged 1-to-1 with the US dollar. And so when we say pegged, we mean like we're trying to keep it to be 1-to-1 with the US dollar. And as we kind of talk through this, we'll figure out like how reasonable that is. So it can also be trustlessly created and minted by any XTZ holder. So anyone can kind of come into the set of smart contracts and, go mint this asset and then get some of it and transact with it. And it's backed by more value in XTZ than this coin has. And that value is secured by the Harbinger price oracle. So the way that this works is that we put a bunch of XTZ into a loan position, into a escrow account, and we let you borrow the synthetic asset against it. And so we make sure that the value of your backing collateral is always at least 2x of the value of what you've borrowed. And so the value of your KUSD, which you've taken your loan in, is a stable value currency, right? So that value doesn't fluctuate, but the value of the XTZ that backs it does. And so we need to go talk to an oracle to figure that out, right? And so how much value do we have behind this thing? And so we use this oracle that I mentioned earlier called Harbinger, and essentially like this product couldn't exist without oracles. So how does this actually like achieve a dollar peg? So we use like these over collateralized debt positions. So $2 in XTZ backs every $1 in KUSD. So if you imagine you have a bunch of synthetic assets running around, you would never think that a KUSD is worth more than $1. Or sorry, you would never think that it's worth more than $2. And so we know that we have this coin that is probably worth somewhere between 0 and 2. And then we have a bunch of economic levers we can pull to sort of figure out or make this coin's value increase or decrease in value. So one is an interest rate. So your loan of KUSD, we can charge higher or lower amounts of interest on it. Higher interest probably makes it less valuable to hold KUSD, and lower interest probably makes it like more interesting to hold KUSD. And so we can change the demand there. And we also have a debt ceiling where we can make sure that, or we can artificially constrain supply in order to produce the same side effects as well. And so those two economic levers help us get to roughly $1. And then the other thing that we need to make sure is like that this value backing it is always there. And so if the value of your XTZ backing your loan drops, this system starts to fail. And so we have a set of liquidators who can buy out under collateralized positions. So what that means is like if your loan becomes in danger or if your loan has gone below 2-to-1, someone can pay back your loan and get your collateral. And so there's a set of people who work on chain or do this on chain to keep the system stable. You can do it as an individual, or there's a shared pool in the Kolibri protocol that lets you pool together with other people in order to do this. And then lastly, based on all of this, you can imagine that we have this coin that kind of looks like a dollar. It's not actually backed by a dollar. And so to kind of figure out hey, what lever are we pulling? How well is the system performing? We look at these decentralized exchanges that exist on Tezos. And so KipuSwap is the main one. There's a bunch more launching in the next few weeks. And so those exchanges, let us have a view of what the current price is. And so the price stability depends on having high amounts of liquidity on these exchanges. Otherwise, trades kind of move you on and off peg really fast. And high amounts of liquidity means that you can get, or you have better availability of arbitrage. You have better availability for people who cash out if they've taken an arbitrage opportunity. And then lastly, the Kolibri protocol is currently incentivizing liquidity providing to KipuSwap via farming of governance tokens. So with all that said, wanted to kind of just dive into a high level smart contract overview of this system. So starting at this purple box, there's a number of people who have XTZ, they hold it on chain, and they're interested in minting a synthetic asset. And so they talk to a set of contracts called ovens. And so an oven is one-to-one with a user. So every user gets their own oven contract. And this oven contract is the escrow account for your XTZ. And so you can deposit and withdraw XTZ from these oven contracts. And so moving money in and out of this escrow position. And then you can mint and burn KUSD against it. So you can increase your loan value or decrease your loan value. And then the last thing is thanks to Tezos's liquid proof of stake architecture, these ovens actually can participate in consensus. So you can choose a baker delegate for your oven. And it will delegate to that baker can pay you out staking rewards, and you're participating in consensus and helping secure the network. So when a Tezos holder interacts with their ovens, their oven goes out and forwards that command along to this core logic contract, and the core logic contract kind of knows all of the rules of the system and how to interpret these loans and interest rates, and making sure that someone isn't taking a loan that they're not allowed to, or that you're not taking a loan against zero collateral. And so this core logic contract now has a set of things to do. So assuming that the command you issued is valid and has good parameters, it will call out to an Oracle price feed. And the Oracle price feed will tell it the price of XTZ. And then once it knows the price of XTZ, it can determine what the actual value of your underlying oven is, and then how much KUSD you have minted, how much are you trying to mint or repay or anything. And so that helps. That's the means in which we get data into the system. And then based on what you've asked, it might also call out to this token contract, which is the asset contract, and it might mint and burn tokens to your address. And then the token obviously is the separate contract, which conforms to the asset standard a token asset standard. So this token can get used in other DeFi apps and protocols. And so there's other protocols, could be lending protocols, it could be an exchange protocol, it could be an options protocol. Once it can just be put into other protocols as a building block at this point. And then kind of if you imagine the system, we have a bunch of economic levers. For a while it was kind of Hover Labs just pulling these levers, which is not ideal. As I've mentioned before, I think that in this DeFi space, we want to be as trustless as possible, right? So you probably don't want to rely on Hover Labs as a arbiter of value for your dollar. So there's another set of solutions for these things called DAOs. And so DAOs are decentralized autonomous organizations, and they provide a set of rules enforced in code to accomplish a task. And so what that means is like, you have a group of people who come together, they agree on some rules for how they're going to run an organization, whether that organization is like their, book club, or whether it is their synthetic assets economic parameters. And they basically codify it in a smart contract and say, hey, this is like how we're going to do our governance, and like decide like this is how we're going to make decisions. And so the decisions are generally made by like voting in an election, and having the outcome be put on chain in a trustless way. And then ownership is managed via a token, which provides liquid governance rights. So, the concept here becomes like one token, one vote. So people with more tokens may have more voting power, and you can also kind of trade and exchange tokens, right? So if I want to exit my DAO, I might give away my governance tokens to someone else. And so there's a number of DAOs on Tezos today. There's CRDAO, which is by Crunchy, which is a DeFi as a service platform. And CRDAO is the way that Crunchy decides what products and services they're going to launch and sets their fees. There are two other DAOs called Kolibri and HDAO. And so both Kolibri and HIC are NFT platforms. And so they have a governance token that decides on how those platforms run. And then lastly, there's another one called WRAP, which is the governance token of Bender Labs. And so Bender works to pull or provides a bridge of assets from Ethereum over to Tezos via a set of signers. And so these are, it's an issuer of wrapped assets via like a distributed set of signers. The WRAP token decides what fees folks are being charged, who the signers are, and helps govern that protocol as well. So how does this fit into Kolibri? Kolibri also recently, as of a month ago, launched our DAO. So you're no longer depending on Huffer Labs to set an interest rate. And our token is called KDAO. And so KDAO is the governance token of Kolibri. Like we said before, one token is one vote in the protocol. So we kind of distributed an initial set of tokens to folks based on how active they'd been in the protocol. So we gave tokens to people who had been using the product, who we think are probably like well educated in how it works. And if we thought you knew more based on the actions that we looked at on chain, we would give you more tokens. And the main purpose of this DAO, like I said, is to control the economic parameters and implementation of the protocol. So economic parameters we've kind of chatted through, which is like interest rate, debt ceiling sort of stuff. You could also imagine like an economic parameter being like, what do we do with the fees that the protocol collects? So like this interest rate, like how much of that like goes to reimbursing like the developers, how much of that might go to a like emergency fund for the protocol. And then the other cool thing is that because we have this modular smart contract architecture that I talked through earlier, we could also change out contracts in that, right? So we could ask the core logic contract to go talk to a different oracle than Harbinger if we found a better price feed. And so all of this is just a set of code that runs in this DAO. So when you make a proposal to the DAO, you provide a Lambda, which is a block of code that will execute, and the block of code can do whatever it wants within Kolibri. And Kolibri knows that the DAO contract is a privileged contract that is allowed to do certain things in the protocol, like set these economic parameters. So you provide this Lambda, it does whatever you want. You go out and convince a bunch of KDAO holders that your idea is good. And then if this election passes, the proposal will be put into a time lock, which gives folks who are in the protocol time to either exit their positions or make any changes that they might want to do before this thing takes effect. And then after a certain amount of time, the Lambda will just run automatically and the system will update trustlessly. And this was all governed by a computer program. There was no kind of human in the mix doing anything here. So all of this is on-chain trustless and just executing as a like smart contract, which is really, really cool. So just to do a real high level overview of kind of like how this looks in contracts, starting kind of from the top left, there's some proposer. And so the proposer is a KDAO holder. And the proposer submits a proposal, which, like I said, is a Lambda or a block of code into this DAO contract. And then moving kind of down in the chart, there's a bunch of voters who are also KDAO holders. And so the DAO now has a proposal in it. These voters look at the DAO and decide, like, am I going to vote yes, no, pass on this proposal? And they, produce an outcome of this election or this vote. And so if the vote passes, the DAO will go ahead and execute the proposal's code against the Kolibri contracts. And so the code might be as simple as calling like an entry point set interest rate with like 10%, or it might be more complicated, like deploy a new Oracle contract and talk to that Oracle contract instead. And so, like I said, the sky is kind of the limit on like what your code in these Lambdas can do. Cool. And then thank you obviously for coming. Questions are super welcome. I have my Twitter here. My partner Luke Youngblood also has a Twitter here if you'd like to talk to him. And then if you want to just generally talk to Hover Engineering, it's hello@hover@. And so I'm super happy to sort of take any questions at this point.
So hi, so you guys can actually post your questions on the YouTube channel. Then if there's any relevant questions, we will actually showcase it there. Yeah, I think we can just give ourselves like 1 to 2 minutes in case. I see one already. Okay. This guy called
Sure.
Pirates. Yeah.
Yeah. So the DAO contract is actually open source, and it's called Murmuration. It's on the Hover Labs GitHub, which is github.com/hover-labs. Sorry, I don't have a visual link of that. And the way that this works is it just holds a set of, or it has a set of entry points on it that basically look like propose and vote and execute. And so on step one of this is like you go in, someone throws a proposal in and the contract like buffers it. And the contract keeps account of yes, no, and pass votes. And so voters call the vote entry point with the value that they'd like to vote on this proposal. And the contract just kind of keeps a running tally over some time. And after the time has elapsed, it stops tallying votes and doesn't let anyone vote anymore, at which point the outcome is finalized. And so anyone at that point can call this execute entry point. And if the vote has passed, it will go ahead and execute this smart contract or this like code against smart contracts. If it has failed, it will just unload the Lambda. Nothing will happen. And then like kind of under the covers, so like you can imagine that I call vote on some proposal. So like I call vote, the DAO contract needs to go out and go talk to like this token contract and figure out like, hey, how many tokens does like Kiefer actually hold at this address? And so that is like a pretty simple like contract call that just says like goes out, talks to the KDAO token and figures out what my like voting value is. The other really cool thing we do is that the KDAO token keeps track of balances over time. And so like the KDAO token might know that I owned 50 KDAO the KDAO token contract might know I own like 50 KDAO tokens at block 100, and now we're at block 150 and I own 0. And so the way that we kind of avoid people borrowing and lending, or borrowing tokens or like buying up tokens to kind of participate in these votes, is we always use the value or the amount of tokens you had when the proposal was submitted. So that prevents these tokens from being used in double votes and prevents people from taking like a flash loan on a lending platform where they borrow 1 million tokens for 1 block or something, which I think is pretty cool and like useful for kind of like flash loan resistance and like manipulation in the future.
We have another question. Yeah.
Can I share? Yes, I can share. Give me 1 second. I actually don't know if I can type in that chat. I just threw it in the private chat, Brian, if you could help me get it in there.
Yep, I'm going to post this in the chat for you guys. So, okay, hold on.
Yeah.
So you can, yeah.
And so can this be replicated for an NFT DAO fund? Yes. So like the way that this works is like the Kolibri smart contracts just know that there's a contract or address that can do certain things to them, like set the interest rate. And so that address right now is set to be this DAO contract we've deployed. And so like that's a very simple concept that you could put in any smart contract you write, where like most contracts do have some sort of an admin, someone who can administer or like upgrade these smart contracts. And then there's nothing specific to murmuration itself that works with Kolibri. So when you deploy a murmuration contract or an instance of the murmuration contract, you simply tell it like, hey, this is the token that we're going to use to vote. And so you can either bring your own token, you can use ours, the token contract implementation we've written, and put whatever symbol and logo or thing on it and ship it. And so like the entire thing is very generalized and useful, and we've deployed it in production today, so we think it's pretty good. And I think that taking it off the shelf is probably a pretty reasonable thing to do based on your use case. Cool. Price oracles. So yeah, I think we kind of talked through this a little bit. Let me go back and grab my screen share. Yeah, so I guess like a concrete example here is, for having talked through all this with Kolibri, Kolibri needs to know the price of XTZ, right? So like you can imagine in this off-chain world, we have a data source. And so Kolibri uses Coinbase. And so Coinbase is making trades constantly. They can tell you the last price that XTZ traded at in USD. And so they provide an API, and the API says, this is the price data, and here's a cryptographic signature that proves this came from us. And this is really great for Coinbase because they don't have to interact with a blockchain. They don't have to pay fees. But Coinbase is probably invested in seeing the crypto ecosystem grow, and they have a bunch of good data that can help it get there. And so if the crypto ecosystem grows, more people will probably trade in Coinbase. Coinbase will make more fees, and Coinbase, by the amount of value that they have, is pretty good at making sure keys don't get compromised. And so they produce a feed of data, they produce some signatures with it, and those signatures guarantee that this feed of data is legit. And then you could imagine sort of moving right across this chart. There's a poster entity, and so the poster entity could be me, it could be you, it could be another user of another DeFi protocol who's just interested in getting this data on chain. And so the poster literally goes out, grabs this data from the Coinbase API, and then makes a call into the Tezos smart contracts. that says, hey, here's some data, here's a cryptographic signature. And so this Oracle smart contract, its job is to just make sure that this data makes sense to store. And so the Oracle contract does two things. It like looks at the timestamp on the data and says like, is this newer data than I knew about before? And then it looks at the data and makes sure the cryptographic signature matches Coinbase. And then if so, it just stores the data point into its contract storage. And the Oracle smart contract has an entry point on it that other smart contracts can call, which is like get price. And it takes like a parameter that is a symbol like XTZ USD. And it will call you back with the answer to your query. Yeah, and like you could imagine, like there's a lot of sort of different ways that you might want to look at this data. So the scenario I just described is like a spot price. The Oracle we use actually has a separate smart contract as well that will move data out of the Oracle contract and perform a volume weighted average price on it. And so we think volume weighted average is like a slightly better algorithm because it sort of normalizes either bad data points or like really low traded data points, which is it's finding an accurate price via an Oracle is a hard problem. And I'd encourage you to kind of look up like, excuse me, some popular like Oracle hacks. So like Compound had one. Compound is an Ethereum lending protocol. They had an Oracle issue in November where prices on Coinbase and Uniswap diverged. And so the Cover Labs team thinks that volume weighted average price is like one of the things that we can do to sort of fix this problem. Cool. Anyone else?
I do not see any more questions. So there is one more actually.
Oh yeah.
Oh.
Yeah. So the like hard part of doing this really is like getting high amounts of liquidity. So like for this thing to be stable, you need people to be able to trade in and out at around $1. And so and for that to be possible, you need people to be providing liquidity for these trades to take place on exchanges. So I think Kolibri at current time is the third most liquid coin on KipuSwap, which is the most popular decentralized exchange on Tezos right now. And so, one of the things there is like figuring out how to convince people to provide liquidity. And then like once we have people providing liquidity, convincing people to run arbitrage on it. So if the price is currently like 95 cents on KipuSwap, like you could buy at 95 cents and then sell when it goes back to $1. And as you get more and more liquidity, these price deviations happen less and less. Sorry. The other cool thing or other like interesting thing that like I'm really looking forward to is KipuSwap uses like a standard bonding curve, which is great for arbitrary assets, but there are other trading curves you can use where you know that like these two assets should be highly correlated. So you might imagine like a trading pool of like, or a trade that goes between like KUSD and USDTZ, which should both be about $1, might like have different properties in how they produce prices within this pool. And so I think like that sort of stuff like coming out in Tezos, which I think there are some teams working on, will be really cool and useful for price stability. So the core logic contract it's kind of, it sort of like knows everything about the system. So it basically codifies the set of rules, which is like, hey, you have, X amount of KUSD loaned and like this amount of XTZ in your debt position. What are you allowed to do, right? And so like, you make the ovens can make requests into this core logic contract and say, hey, like I am this oven, like this is the data I have on it. And the core logic contract knows that it trusts this oven contract, to be honest. And so the core logic contract just gets all the data it needs to make these decisions. So like some of it comes from the oven, some of it comes from the oracle. And then it just carries out this like check to make sure that you're not borrowing against, or you're not becoming under collateralized, or it makes sure that you're like allowed to borrow the assets that you want to borrow. Yeah, I think like, I think hopefully that makes sense. I'm not sure how deep you sort of want to go there. Yeah, the other thing is I think that we're very, very close to open sourcing Kolibri contracts, and so hopefully you'll be able to go out and like look at them soon.
Okay, thank you. Thanks, Keith, for answering all the questions here. What is price oracles, and and going through the workshop. For DeFi and wrap assets like wrap Bitcoin and Ethereum and many other aspects of DeFi. So would you like to have any final comments about this workshop as well? Before we actually end it, yeah.
Yeah, I'm just really excited to see kind of like more things built on Tezos. I think like lending platforms really excite me, and I think like building some of these like cool exchange programs, like if you're familiar with Curve on Ethereum, like those sorts of things I think are really like ripe to go be made on Tezos and like could really take off really quickly. So I hope someone out there is considering building them.
Because yeah.
And then I just dropped my Twitter handle and email address into the private chat. If you could throw them in the public chat, I'd appreciate it.
Okay, sure.
I'm not a hackathon mentor, but happy to kind of take ad hoc questions, especially if you're like interested in integrating either KUSD into your application, or if you're sitting around and want to deploy a DAO for something, I can help you get Murmuration up and deployed.
All right. Okay. Thank you so much, Keith. Keith actually took his time from Harvard to actually come down to to teach us about for DeFi. And I'm not wrong, it's quite early there, right?
Yeah. Yeah, it's kind of early in California.
Yeah.
Excited to be here.
Yeah. So I hope you guys who's actually watching can actually take some notes, or when you want to build on products in this hackathon. If you're interested in DeFi, you can ask your mentors, or you also can drop down a message to Keith as well if you need some some guidance and things like that. So yeah, so thank you so much once again for your time. Yeah.
Cool. Have a nice rest of your evening, everyone. Thanks for having me.
Thank you, everybody. Okay.
Bye.
And good night.